Hello guys, welcome back to My Finance Teacher. Nice to see you on the channel. Let's have a look again at this gold chart. And what do I want to do here? I just want to smash this chart. I want to smash this computer because gold keeps going down and down and down. But actually, what I want to do is I want to move this cycle bracket again by a couple of weeks, stretching this cycle. I know what you're going to tell me. You're going to tell me, come on, man, you've been stretching this cycle, this prediction of the rally that comes up soon for several weeks already. Where is that rally? Well, gold has been going deeper and deeper into the oversold territory. Look at this 10-week RSI. It's already touched the oversold territory. And during the last intermediate low, which was in December last year, the weekly RSI wasn't as deep. Intermediate cycle before that, the cycle low didn't show us an RSI that was as deep as it is at the moment. Actually, if we look at the last 2-3 years since the bear market in gold finished and the bull market started, RSI hasn't been that deeply oversold except for one time only in December 2016 after Trump election and the severe drop that lasted for 1, 2, 3, 4, 5, several weeks. So we haven't been that oversold over the last a couple of years, over the last 3 years with one exception. And the last time RSI was so deeply oversold, gold price managed to rally from the low over the next couple of months by about 10%, and after a couple of weeks cool down, it continued the rally by another 5% or so, totaling 15% rally. So is that what we're going to expect soon? I think so. I think so, because this cycle has been going on for 7 months already. It's not out of the ordinary. Usually these cycles last for about half a year, 6 months, but generally it's been going on for 7 months already. It's a relatively stretched cycle, so we are due for a bounce up. Besides that, the chart itself shows that gold has reached some relatively strong support zones. This is the 200 week moving average that is very likely to act as a strong support zone. And another one, the green line over here, is the trend line that connects the 2015 low in December and the December 2016 low. That's also very likely to act as a support zone. So there is sort of a congregation of support zones around where gold is at the moment, around 1240. Plus, we are quite late in this intermediate cycle. All of that points to a higher probability that gold is going to bounce soon. If a similar bounce happens as it did happen the last time RSI was so oversold, 10% up from here would bring us somewhere to a 1360 or so on the gold price itself. That sort of agrees with one of my previous forecasts. Now, looking again at RSI, it is oversold, as I said, and since the bear market finished, since the last 2-3 years, we haven't been that oversold except for one occasion. And even if we go further back, let's say a whole decade, look at the last decade. How many times have we been this deeply oversold over the last decade? 1 over here, 2 over here, that's sort of first half of 2013, 3, that's near the second half, in the second half of 2014, 4, in the middle of 2015, and of course 5, the instance that we mentioned in the end of 2016. This is only the 6th time that RSI is this deep into oversold territory over the last decade. So that happens sort of once in 2 years on average. So it's a pretty unusual situation at the moment. Let's have a look at more data, shall we? Because because it is unusual and because we want to see when are we going to finally have this rally in gold. Let's have a look at the US dollar. It, I think, is also approaching some congregation of resistance zones. Firstly, the 200-week moving average. Let me delete some of these resistance zones so that we can see more clearly. This purple line is the 200-week moving average. Dollar over the last several weeks didn't close above that 200-week moving average. That's a resistance zone that I think might prove to be a difficult one to break. There is also a resistance zone formed by this previous cycle, intermediate cycle top at around 95.3 or so on the dollar index. Again, gold didn't close above that resistance zone either. And over the slightly longer term, there is sort of this resistance zone, which all over 2015 and 2016, there's a lot of intersection somewhere around 95. So again, congregation of resistance zones for the dollar. And since dollar is quite late in its intermediate cycle has been going on since February already, I don't think it's going to break above this resistance zone within this cycle, which means it's likely to go down over the last several weeks, few months, which is going to most likely help gold move upwards. And again, since we haven't had a move up in gold for a few weeks already, which we've been expecting, let's have a look at more data. Let's have a look at euro dollar. Euro has been losing over the last several weeks. This is a weekly chart again. It came close to 200-week moving average. This blue line is the 200-week moving average. It didn't break below that support zone. I think it will prove to be a relatively important support zone over the next several months. Again, the RSI on the euro is relatively close to oversold levels, and there is a support zone besides the 200-week moving average. There is a support zone that's also formed by what has been happening to euro all during 2015-2016. All of these highs also give us some sort of a range like this that gives us a support zone, also respected by the previous low in December last year. So again, a congregation of support zones for euro, for gold, congregation of resistance zones for the US dollar, plus the cycle duration. All of that tells me that we are probably going to see a nice rally in gold pretty soon. And I know I've been saying this since sort of the end of May. Over here, when gold was at about 1280 or so, it's now around 1240 or so. That's a loss of another 3%, something like that. But well, looking at GDX since the end of May, when it was somewhere at about 22.3, it's only lost about 2% rather than 3%, as gold did. And usually GDX amplifies the moves in gold. In this case, it didn't, which again is probably another indicator that the smart money is accumulating some shares in an expectation of some nice move upwards in gold. Another thing that I want to mention here is, remember, nobody knows when is the exact day, when is the exact hour of that intermediate cycle low. It's a good strategy to gradually accumulate some shares, say of GDX or whatever else you are buying in relation to precious metals, over some period of time where you think a cycle low is due. We're going to be careful because, as I said, we're not sure when is the exact low going to happen. What I mean by being careful is not to use too much leverage, as I've seen in some of my comments. Thanks for your attention. I hope we're going to see gold above, say, 1350 by, say, September. That would be nice, wouldn't it? If you would like that, hit the like button. If you'd like to see gold at 1200 by September, hit the dislike button. Let's see what happens. Share your opinion in the comments. I'm interested to read about that and to see if there's anything else I've missed. Bye-bye.